Hello everyone, and welcome to this educational presentation of trading tops and bottoms in all markets. Now this is a re-recording of the previous presentation we had. I realized we had some technical difficulties and now we seem to have sorted them out. So thanks for joining us once again. I hope you enjoy this video for your educational purposes. Now tops and bottoms are something that virtually every trader is taught to trade in the very beginning of your trading career. For example, we're always taught to buy low and sell high. And this can work sometimes very well, but most of the time it's that one trade where you give it all back. Because I was taught this same way when I first started trading some 4 decades ago, to always pick a bottom and pick a top to get out and to go short. And that would work very well for 2 or 3 trades, but always the 3rd or 4th trade, it would give everything back and I'd be right back to where I started, even worse. Now, we have a lot of volatile markets as of late, and picking a top or picking a bottom in them is very difficult, and most of the time, if you try to pick a bottom in this recent market, you'll have a very difficult time generating any gains. Now, for example, let's look at this older chart here. Here's a chart in LB. All right. Well, as you can see, the market is going lower, but let's say your expertise is, let's say, indicators, and all of your indicators say that you are tremendously oversold. So you have to buy at this level. So let's say you jump in. Okay, you jump in and buy, and then this happens, all right? Doesn't look too good. But maybe you say to yourself, well, you know, that $10,000 class I took tells me that all the institutions are buying at this level now, and this is where, you know, all the volume has picked up to the upside, so I'll buy some more. And then this happens, okay? Doesn't really go down that much, but it doesn't go back up. Lastly, you say to yourself, well, there's got to be some major support right here. Perhaps I got in just a little bit too early, so I'll do what they call tripling up, and then all I need is for a little bounce in order just to break even. So you triple up and buy some more, and ultimately this happens, okay? Look familiar to anyone. Well, with the entry technique to a pattern and to a method I know for picking tops and bottoms that I was taught some 40 years ago on the floor of the stock exchange, you actually could have potentially generated a profit of 40 points using this technique that I'm about to share with you today. And you'll see how simple this technique is by using our new platform. That's the PTS Primo charting platform, the educational portal that actually makes trading simple. So welcome once again. My name is Steven Primo, and once again I apologize for attending earlier today the presentation. I realized we had technical issues. That happens every once in a while. I have a new setting now, a new computer, so I hope things are working well with this recording. Now, I've been trading for a total of 42 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist, so that's where we get the name specialist trading. A specialist is someone who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a stock, you would contact your broker, who in turn would contact the floor broker, who in turn would walk up to me, the specialist, and say he wants to buy or sell a particular stock I made a market in. That's the way things were usually done before they went electronically. Now, I was a specialist during the crash of 1987 and the bull market that followed. So I've traded just about everything and anything you can imagine. Any system or any brand new way of trading has probably already been around before. It's just been rebranded or renamed. So in my 42 years of trading straight up, straight down markets, just about every system or method you can think of, I now know what works in terms of consistency, and I know what doesn't work at all in terms of consistency. So we're here to fill that gap. Why waste your time, your energy, and your hard-earned money searching for the Holy Grail when it's really right here in front of you? It's simply educating yourself, and this is the service we provide. I teamed up with Pro Trader Strategies and myself in Specialist Trading, where all we do is provide our students around the world in over 115 countries and in every state in the United States all of the different techniques, strategies, and tools that I have accumulated in 42 years to hopefully elevate your trading. And you'll see today how I plan to elevate your trading with this great technique and method for picking tops and bottoms. But before we begin, as always, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this entry technique for picking tops and bottoms, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. As you're taking a brief moment to view that, excuse me, I'd also like to call your attention to our Twitter handle. You can copy it right there. I'd like to invite each and every one of you to follow us on Twitter. Every day I post different information from signals that our strategies have generated to little bits of financial wisdom. There's a lot of great free educational information, so feel free to follow us on Twitter. Now, as I stated in the opening presentation notes and the entry, we are all about educating you. In fact, if you've come here looking for a way to find out what to buy or sell on a nightly basis, or what the perfect time frame is for this particular market, or what market you should be trading, you've actually come to the wrong place. Because our only job as an educator is simply to teach you and to pinpoint high probability setups so that you can ultimately make your own trading decisions. It's been my belief, in my opinion, with my 42 years of experience, that the only way one will become a consistent trader is by making your own trading decisions. Unfortunately, the entire industry is based off of you going to some website or paying for some service or purchasing some $10,000 system that automatically makes the decisions for you. And that, to me, is a recipe for disaster, and also why 85% of all traders fail, because you're taking yourself out of the game. So our job is to put you back in the game. So if you're coming here to find out, have me tell you what to buy or sell, once again, you've come to the wrong place, because my goal is simply to teach you how to trade with a specialist edge. This is the same edge that has sustained my trading for 4 decades, and hopefully it will be able to do the same for you. Okay? Now, we're going to start once again, and for those of you who may have joined us later or whatever, this is a re-recording of the presentation we tried to do today. We had some technical issues, and now things seem to be working, but if for some reason we go into another problem with this recording, please get back to us, but things should be fine now. Okay, so let's begin today's presentation. All right, let's first start out with how most people trade tops and bottoms. After all, as I said earlier, this is the way we're always taught in the beginning. When you first start trying to trade and trying to learn how to trade, you're always taught to buy low and sell high, which in and of itself is a good practice. But the way we've been taught with traditional wisdom has its pitfalls. For example, this is the way most of us are taught, myself included, when I first started trading tops and bottoms some 4 decades ago. As we look at this older chart in VRSN, in order to trade some type of overbought, oversold scenario that generates tops and bottoms, we need some type of indicator or at least some information. That can come from something that you've devised. It can come from someone you see on TV that tells you that a certain stock or market is overbought or oversold. But we need something to tell us that the markets are too high or too low. Now right here you'll see underneath the chart I have plotted just a simple stochastic oscillator, okay? Don't ask me what the inner settings are. It's just go to your to your settings and plot stochastic on your platform. It doesn't matter which platform you're using. It doesn't matter what time frame. Just plot a simple stochastic oscillator, okay? And this can be any. I don't want you to think that this technique has to be applied with the stochastics. It can be any oscillator. It can be some indicator that you devised. And once again, it can be some guy on TV telling you that this market is overbought or oversold. We just need to know when something has gone up too high or gone down too low. Now, conventional wisdom tells us that we are in the so-called overbought area in the oscillator when we cross over above this threshold, this top blue line. And when we cross below this bottom blue line, we were in the so-called oversold. So obviously, if things are overbought, you want to sell. And if things are oversold, you want to buy. So when we wait for these lines to cross, that's usually our signal to go short or to sell. And this works pretty well right here, okay? And we usually wait for the indicator, the tool, whatever you're using, to go into the oversold area. And when the lines cross, that's our indication to buy, okay? So you covered your short, you bought, and a couple of days later, we start to go right back up. And now we see that we're in the so-called overbought area again. And when the lines cross, now we sell. So at this point, you're probably patting yourself on the back and saying, boy, trading is easy. I'm going to retire in about 6 months. This is just like free money, okay? You have 2 or 3 good trades under your belt and you feel happy. It's just consistency and you really love what you're doing. And then this happens, okay? Doesn't go down the way you thought. And you're thinking, well, okay, maybe it's going to go even further, so maybe I'll double up because we're still in the overbought area. The line's just crossed again, so I'll sell some more. I'll double up. And then it doesn't really go down anymore. In fact, it keeps going higher. So now you're saying to yourself, wow, this is kind of strange here. It worked before the first 2 or 3 times. Well, I just need it to come down a little bit. And if I sell some more by tripling up, well, it doesn't need to come down that much and I can recoup my loss and maybe make a little. So I'll sell some more, okay? So then it doesn't really go up anymore, but it doesn't go down either. And so you're waiting all this time for this indicator to go back into the oversold and it doesn't happen. So lastly, you say, okay, give it one more shot. The line's crossed. Let's trip or quadruple up. And then this happens, right? Does this look familiar to anybody? Looks familiar to me because this is the way I used to trade. Now, here's what my mentors taught me. They said, Steve, when you try to pick tops and bottoms, that is similar to gambling. I mean, picture it. If you think of the worst odds in your favor when you go gambling, those are the slot machines. Now, the slot machines are designed to give you a winner once in a while. You know, the lights go off, the bells and whistles, and this gives you this false sense of security that you're doing well. And it does that in order for you to stay there, because if you continue to gamble, the odds are you're going to give it all back. Well, picking tops and bottoms is the exact same way. Every once in a while, it will generate a few winners in your favor, as we saw at the beginning of this. And so you'll get this false sense of security thinking that you're on the right track. But if you stay there long enough and continue to trade the same way with the same methodology, you're most likely going to give it all back the way we showed right here. I say this once again from firsthand experience because this is what happened to me. So this was very discouraging because I had put in a lot of hard work and effort. I had gone to all the classes when I first started trading. I had read all the books, and I was always taught that, you know, you're supposed to sell when something is overbought and you're supposed to buy when something is oversold. And I always remember this is what my mentors taught me. It was very difficult to grasp, but I remember one of the first things they ever said to me was this: there is no such thing as overbought or oversold. In fact, that statement is so important, I'll repeat it again. There is no such thing as overbought or oversold. I mean, think of it. We've all seen stocks go as high as they want to, tremendously high, from a $2 stock up to a $200, $300 stock, and it shows no sign of stopping its upward move. And we've all seen markets continue to go lower and lower and lower. Do you all remember Enron? It went all the way, you know, in the hundreds to zero, okay? So it's silly to think that you, the small little trader, can get in the way of a strong trend once it's started. I mean, it's really silly if you think about it, all right? So why would you even think that? It's like similar to swimming upstream. Why would you want to swim upstream when it's so much easier to swim with the current at your back? Now, I remember when my mentors first taught me this concept, I didn't want to accept it. And I thought, oh, you know what? I don't believe it because I've seen this work every once in a while, so I don't want to believe it. So I went back to trading tops and bottoms the way I was taught. And over the course of the next couple of months, nothing worked. I had a few good trades. I gave it all back. So after a while, I was ready to accept it. So I went up to these traders who are also specialists on the floor, who have been trading about 40 years themselves each. I said, okay, if there's no such thing as overbought or oversold, how do you trade these markets? And they said the right way to trade overbought and oversold markets is simple. You go with them. And I said, go with them? What does that mean? Well, they taught me the technique that I'm going to be sharing with you today. But the first thing I want to state is this is simply a technique. It is not a strategy, because a strategy comes with all the pieces of the puzzle, meaning that you know exactly where to enter, you know exactly where to exit, you know where to place your stop, you know how to track the trade, you know all about money management. Those are all important pieces of the puzzle that you must have in place before you even take a signal. That's what makes up a strategy. A technique is simply one piece of the puzzle, one part of that strategy, okay? One spoke in the wheel. So what we're going to do is teach you the concept, but teach you the entry technique. How you decide to exit and place your stop is entirely up to you, but it shouldn't be that difficult if you've been trading for a while, okay? All right, so what exactly is this technique? Well, let's go back to that older chart we looked at, VRSN, okay? And we still have the stochastic plotted. And remember, it doesn't make a difference what indicator you use, just as long as it generates some type of overbought or oversold indication. Now, we're looking at this plain stochastic oscillator. And what my mentors taught me, they said, Steve, the first thing you need to do is to stop listening to outside noise. Because they called everything. They called fundamental news, they called listening to the institutions, earnings reports, the so-called trading gurus on TV. They said that was basically noise, and that these guys and these indicators and these institutions had no better levels of consistency than anything else. So I said, well, then what am I supposed to listen to? And they said, you listen to the chart in front of you, the market. What is the market telling you? And I said, well, sure, in hindsight, it was telling me it wanted to go up, but I didn't know that. And I said, well, actually, you did. Because here's the simplest way to find out what the market is telling you, is you add the 50-period moving average, okay? And on our platform, all you have to do is click on the buy-sell line, because that's what we call the 50-period moving average. We call it the buy-sell line because it tells you whether you're going to be buying or whether you're going to be selling. And you'll get a drop-down menu right here, and that's a 50-period. Just click on 50-period moving average, and then automatically it's plotted. And now you ask yourself, where is price in relation to that 50-period moving average? If price is below, you will only have a seller's mindset or a seller's bias. But in this case, price is above. So this means you will only have a buyer's bias, okay? So now that you know that you should only be looking at this stock from a buyer's point of view, there is no reason in the world why you ever would have thought it was overbought. Even though we had all these so-called overbought indications, well, look at how it kept going higher and higher. Sure, it sold off a little, but then it went right back up, went up to new highs, went right back up. All right, so how are we going to trade this then? Because this is just telling you what side of the market to be on. The 50-period moving average is not a system or a strategy. It doesn't tell you, well, okay, we're above, just buy at the market. You need some structure. All right, so here's the structure. The first thing you want to do is identify the so-called overbought areas. If you're looking to buy, then you identify the overbought areas because we are above the 50-period moving average. And the overbought areas are right here, circled in green. These are the traditional overbought areas, all right? Now we know, learning from our mentors, that there is no such thing as overbought. And so why would we use these? Because we're going to exploit them, because we know that they don't hold. There's no consistency. So what we want to do is look for a top that was made, a short-term top made in every one of these so-called overbought areas. You know, a top means something like this. Here's a top, here's a top, here's a top. And then we put a little green line over them. This is a little horizontal green line that we furnished for you. And every time we go above that, that's where we're going to be buying, okay? So we always tell our students, if you take the very first setup right here, the very first trade that trades above, that's where you have the most bang for your buck. So now we see, looking forward, that we traded above them. Had you taken this first one or two setups here, that would have been a 14-point potential gain in your favor if you held at that long. Now remember, it's up to you how long you want to hold out. You can go for 14 points if you want, or 15. Maybe you can go for only 1 or 2 points and get out and go for the next one. It's up to you, because our philosophy is you decide how you want to exit or where you want to place your stop, not us. Now in our courses, we provide you with 6 or 7 different variables for entering, for exiting, and for stop placement, and also for money management. But it's up to you how you decide to apply them, not us. We're simply the providers of the education. All right, so before in VRSN we had nothing but losses. Now you have nothing but winning trades. How about that example in LB that we started the presentation off of? Well, looking back in hindsight, sure, you should never have bought this. But how would we have known that? Remember, what's the first thing we do? We listen to the market. We don't care about earnings. We don't care about institutions. We care about what the market is telling us. It's a lot simpler, and you don't have to waste your time and money, because all you have to do is click on a 50-period moving average on our platform. It's already provided for you. You just click it on right there. And we knew well back in advance that we should only be looking at this from a seller, well before it fell another 15 or 20 points, okay? All right, so we know at this point that we should only be selling. We don't sell at the market, because this is not a strategy. It's simply telling us what side of the market to be on, buy side or a sell side. So now, since we're looking at this from a seller's point of view, we want to identify all of the so-called traditional oversold areas, because price is below the 50. All right, since we're below the 50, we're only looking to sell. And these are the traditional oversold areas. And we're going to exploit them because we know that most likely they will not hold. So we're looking now for short-term bottoms. Here's a bottom right here, here's a bottom, here's another bottom. Little bottoms that were made while we were in these so-called traditional areas, because most people think, well, that's where they're hold. And we're betting against that because we know there's no consistency in that. All right, so here we've identified all the short-term bottoms. Once they trade 1 or 2 ticks below, we'll short. And you can short by either shorting the stock, or if you can buy the puts. Remember, you decide, not us. This is not a system. This is simply a high probability entry points here we're identifying. And had you taken the very first ones here, that's 40 points that you could have potentially captured. Okay, your decision how long you want to stay in. So before, where you would have had just losing trades, trying to pick a bottom, trusting the institutions, trusting the earnings reports, trusting that guy in that chat room, now you don't have to waste your time trusting things that have no levels of consistency. All you have to do is trust the chart in front of you. All right, so let's look at some recent examples, and we'll show you how simple it is to apply this process by using our platform, the PTS Primo Charting platform. All these examples are generated using our platform. Here's a chart in Casey, C-A-S-Y, okay, going up to the 2nd or 3rd week in August. As you can see, we've been going straight up. So how would we have known this in advance? Well, we want to take advantage of the traditional overbought areas, so we apply the 50. And as you can see, we were 1, 2, 3, 4, 5 bars above, which is plenty to tell you that it wants to go higher. And look what happened. All right. Now we identify these overbought areas. We look for the so-called tops. And then had you taken the first one right here, or the second one, potentially 15 points you could have captured in your favor. Okay. See how simple this is. Now, what if you had tried to sell that all the way up, thinking it's topping out? Would you think you'd make any money? I don't think so. How about Cisco, CSCO, okay? Stock was kind of going sideways, and then it started to fall out of bed. Do you have to wait for the earnings report or wait for the institutions to tell you this? No. You simply have to apply the 50-period moving average, because we're going to take care of these traditional oversold areas. So we have the 50-period moving average. And now we see that we're below right here, so we want to identify the oversold. And there's a pivot just below here. 1, 2, 3. So this is our first area we could have gone short, and our second. Now we gapped down a little bit, so you would have sold right here, but you still had 8 points in your favor. Now, one of the ways our students like to use this technique is to get out of positions. Let's say they don't like to short or don't want to go short, but they just want to exit a position that's losing money. Well, they'll use this as a stop placement. They'll say, well, once I'm below the 50 and I get a pivot, I'll just put a stop in here and I'll exit. At least I'll save myself 8 points to the downside. Okay? How about PAGS, P-A-G-S, okay? If you had tried to sell and short this stock or get out too early because you thought it had topped out, you would have really been, kicking yourself. Now look how many times we were overbought. Right here, right here, right here. This has been overbought for the majority of time. And did this really sell off at all? Remember, as my mentors taught me, I'm teaching you, there is no such thing as overbought or oversold. It is really a gambling mentality trying to pick a top and bottom. It will work every once in a while, but times like this, you'll give everything back. All right, how could we have at least turned this into a winning scenario? We apply the 50-period moving average, we identify the overbought areas, and we would have bought one tick above every short-term high that was created there. Now, where you had been losing a lot of money and just said, well, I'll turn this into a long-term loss here, you could have actually potentially captured 15 points to the upside. How about this example in W, okay? This has been heading lower, had a little bounce right here, but then a week or two later, making new lows. How could this technique have helped us? Well, we add the 50 period. We see there at this point, we were well below the 50 period. We have the so-called oversold areas. We had two areas right here where we would have gone short, and then 30-point potential to the upside. Now, if you wanted to get out because you had numerous closes up here, you could have done that, or you could have gotten back in and still had potential. How about this example in SHAK, S-H-A-K? Okay, once again, if you would have tried to short this, you would have lost a lot of money. Isn't it easier when you swim with the current at your back? That means trading in sync with the overall trend. Now, some of you would say, well, how do you know the overall trend? It's simple. Add the 50-period moving average. We've known well in advance that this has been above its 50-period moving average. So why would you sell this? Now, sure, it oscillated above and below here, but you need 3 to 5 closes above or below to tell you that you've changed direction. Now, see, here we had one close below, and then we went back up again. So that's not enough, okay? Now, we simply use the same technique. We identify the so-called overbought areas, and that's where we get in once we trade one tick above a short-term high. Potentially, we could have captured 30 points coming into the second and third week of August. Here's another example, an NEWR, and this is what we mean by how trading tops and bottoms can kid you sometime into thinking that you're doing all right. For example, we had a so-called oversold scenario right here. And if you had bought right there, well, you're convinced yourself you had a nice trade, okay? Now, you go short right here, and it goes down, and you cover your short right here when it crosses above, and you're thinking, boy, this is amazing, I'm going to make a lot of money. And now you short again, and it gets to the so-called oversold right here, so you cover, you go long, and you think, boy, I've had 3 or 4 good trades, and look what happens on the next one. You give it all back. This is what I mean by a gambling attitude. It's just like the casinos. You could get 2 or 3 really nice trades, but it's that next one where you give it all back. That's why you should never use this, because there's no consistency, and you never want to trade a method that gives back everything that took you 2 or 3 trades to make. You would do a lot better if you simply added the 50-period moving average and saw that this whole time we were below. So you had a seller's bias. Sure, you had one above, right back below. One above, right back below. One above, right back below. So that's not enough to tell you that you were going higher. You need at least 3 to 5 consecutive closes above to tell you that the trend has changed. So you could still stay short and look at all this from a seller's point of view. Had you had taken this very first setup and stayed short, you could have captured potentially 38 points coming into the 3rd week of August. All right? So much easier than to have a couple of good winners and then give it all back, right? Do you know how discouraged you would have felt after that and how frustrated? Whereas if you traded this technique, you would have had nothing but winners. All right, so let's look at some other markets and other time frames, because we know that not everyone trades daily bars of stocks. Let's look at a weekly chart of Roku, ROKU. All right, nothing changes because we've changed the time frame. The same process occurs. We apply the 50-period moving average. We know that right here we had consecutive closes above. This is where we go in the so-called overbought areas, right here and right here. And if we purchased one tick above those highs, 70 points coming into the 2nd, 3rd week of August. Okay? Not a bad long-term trade there. Or what about Macy's? This has been going straight down, okay? There's no reason for you to wait for earnings or to wait to see how the company's doing, because if you added the 50-period moving average, you would have known in December of 2018 that you had 1, 2, 3, 4, 5 consecutive closes. You should have been out of this stock at 27 roughly, okay? Because it's below the 50. And you could have shorted or bought puts roughly at 27 all the way down to 16 or 15, all right? You could have potentially captured 12 points on the downside if you wanted to. Now, just because we move to another market makes no difference. The process is the exact same. Let's look at the British pound here, all right? First thing we want to do is, on our platform, click on Buy Sell Line. In the drop-down menu, click on 50-period moving average. And we see here that this entire time we have been below the 50. Even with this nice bounce here, we only had one day close above and then right back below. So there's no reason to look at that like that was a reason to go long the British pound. Okay? Everything you would have made here buying, you gave it all back a week later. So why not just be in sync with the overall trend? So now we want to identify all of the so-called oversold areas, because we know there's no such thing as oversold. Now, we have 1, 2, 3, 4, 5 areas where the market was so-called oversold. And how well did it stop going down? All it did was pause before it went lower. So no bottoms were ever created here. So we just want to take advantage, and we want to really exploit these areas, pick a bottom every time a bottom was created, and that's where we go short, 1 or 2 pips below. Had you taken this very first setup right here, this was in May of this year, all the way up until this last week, that's 850 pips that you could have potentially captured. That's over $8,000 per unit that you could have potentially captured. Now we know some students try and stay in as long as possible, and we show you ways in which to do that. Other students try to take a quick profit and get out, maybe 5 or 10 pips. There's nothing wrong with either one of those. What's wrong is when you let someone tell you where to exit and where to enter and where to place your stop. You need to do that on your own. It's the same way with intraday trading of the E-mini futures. This was a couple of weeks ago, August 16th, when the markets were going higher. Here's a 10-minute chart of the futures. The same process applies if we're trading 10-minute charts of an entirely different market, if we're trading the futures market. Click on Buy Sell Line, click on 50-period moving average, and we knew well in advance right here that we were in an overall uptrend. So now it's our job to identify the so-called overbought areas, because we know they're not valid and we're going to exploit them. And then we identify the tops, and had we taken the very first signal, that's 35 points potentially we could have captured in a couple of days, roughly about $1,700 per unit, okay? Now, let's see what happened yesterday, because I know a lot of you go to webinars, you go to presentations, you say, boy, these guys show me stuff that worked, and I look at the dates and it was 6 months ago. I want to see something that could have happened today or yesterday. Well, since today is a Saturday, we're going to show you what happened yesterday, Friday. Yesterday, the market went down over 600 points, straight down market. Don't you think that this technique could have helped you yesterday? Here is another 10-minute chart of the E-mini futures, okay? The reason why I have an affinity for the futures is because this is my market of choice. I like to intraday trade the futures. All right, we can see Right off the bat, starting before the market opened, it was going lower. It had a little bounce here. This is where people think, well, we're going to bounce. We've got some major support. Look at this double bottom. We're going to go higher. And then look what happened. If we want to really listen to the market, first thing we do is apply the 50-period moving average. And we see that we've been below the 50-period moving the entire time. Even when we had this bounce, we were below the 50-period moving average. So there's no reason to get excited about some so-called double bottom or some so-called support level. That's silly. We know that we should be looking at this from a selling opportunity. And so we identified the oversold areas yesterday. We found out where the bottoms were. And right here, you could have gotten short right before the opening. And if you had taken that very first one, well, look at all the potential you could have captured. 65 points to the downside. Okay, potentially that's over $3,300, roughly about $3,300 per contract. Now, I know a lot of you would say, well, Steve, if I got short here, I would have lost here. Well, providing where you place your stop. If you go to the last major short-term high here, that would have been right here. You would have placed your stop here. You never would have been stopped out. So it all depends how you trade. Now, sure, if you would have placed a very small stop, sure, you had a small loss. And then guess what? You get back in right here. Don't you think you could have made that loss back? Now, here's something I want to point out. Right before the close, there was a so-called oversold area generated. We made a short-term bottom. And now here is where you would get short. If we go below there on Monday, do you think that would be a point of entry? Well, we're not requiring you or telling you to do that or advising you. We're just pointing this out as an educational signal here. Okay, so let's recap. What did we learn today? Remember, the most important thing, if you only take one thing away from today's presentation, there is no such thing as overbought or oversold. I just showed you recent charts of markets going straight up. I also showed you recent charts of market going straight down. And all the while they were going straight up, the so-called overbought, oversold tools were flashing overbought, overbought, overbought for days, weeks, months. Some things were flashing oversold for days, weeks, months, even years. So why trade with a gambling mentality, just like the slot machines where there's no consistency? It's so much better when you have the wind at your back and you're swimming with the current at your back. So if there's no such thing as overbought, oversold, then what does that leave? That leaves us to never, ever try to pick tops and bottoms the conventional way. We should only use them the way in which we just taught you right now, by going with them. All right, so ask yourself, do you think this edge could have helped your trading this past year? How would you like some more edges? How would you like some more advanced information to help you with your trading? Well, we have a great offer for all the attendees today for watching this recording, and this is going to be a 30-day trial to our PTS Primo charting platform for only $7. You heard about me speak about this before. This is a tremendous offer, though, because there's so much more offered on our platform. Over 40 years of information and things I've accumulated, trading techniques and tips over the years, one click away for you. For example, we have a position sizing calculator. If you want to calculate your position for stock, all you have to do is plug in the variables. It takes about 5 seconds, and you'll automatically know, according to your money management parameters, how many shares you should be buying or selling. It's a great, great tool, and it's on the platform. We also have a strength of trend feature. This is something I developed with Pro Trader Strategies. It's a proprietary tool only found on our platform that is great at finding out if there's any more steam left in a trend, either up or down. It's a great way for finding out if you should get ready to get out or if you can stay into the trade much longer. We also have 4 completely different ways to view our buy-sell line. These are enhanced buy-sell line features. That's the 50-period simple moving average. We also have short-term trend identifiers. This is a pattern that you should be using on a number of your strategies that will really increase your odds for consistency. Now we have over 90 of the most prominent technical indicators. Now I know we have a technician's bias because I'm a technician. I like to look at charts and figures and numbers. But we're not here to tell you how not to trade. We're only here to educate you. So if you really feel that you must rely on fundamental news to help you with your trading, we're not here to stop you. So that's why we've provided you with free Bloomberg TV. When you click on the media icon page on our platform, you will automatically see a live window of the TV, of the Bloomberg TV, right there on your screen. And so any economic report, any news announcement, any earnings report, you will have it and see it reported live while you're looking at your charts at the same time. This also comes included with the platform. And lastly, great personalized tech support. We have dozens and tons of testimonials telling us how great our tech support is. If ever there's a reason why you can't load a chart, or you don't know exactly how, or you need some more help with it, our tech support will be there in a matter of moments just to resolve the issue for you. So this is a great, great offer. 30 days to try it out, our way of getting acquainted with you, where you can try this technique for only $7. Remember, I've accumulated so many things that have high levels of consistency to teach you, to let you go to the next level. That is all on this platform. You could try it out for yourself for only $7. I don't even think you can buy coffee for 2 people for less than $7 these days. So this is a great, great offer. Here's how to take advantage of this. Contact Pro Trader Strategies. I developed a platform with them, and they're in charge of all the tech support. You can either email them or call them directly at area code 310-598-6677. Now that link you see at the very bottom is the link that will take you to the $7 sign-up offer, okay? Now that's not a live link as you see here on this recording, so you're probably going to have to copy or write this down, or copy and paste it and put it on a browser, and it'll take you to this, okay? So you can pause this recording and copy this down, or kind of copy and paste it and put it on a browser. Either way, if you have any difficulty, just contact Pro Trader Strategies. There's absolutely no obligation. They can sign you up over the phone if you'd rather do it that way, and call them directly, and they will have no problem in helping you or giving you more information involved with the $7 introductory offer, along with any other courses we may have or strategies that you may be interested in, okay? As we conclude, I just want to say thank you once again. I apologize for the technical difficulties we had this morning. I hope this video, helps to, go over all the information you may have missed this morning. And it's this exact same webinar, so don't worry, you didn't miss anything, and you've gotten all the same information. But hopefully, you'll be able to hear this one. We corrected the problem, and hopefully, it's working well now. As we conclude and take one last look at our disclaimer, I just want to say thank you so much for attending today. I wish you the best of luck and look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.